The last few days, people have been asking very large existential questions about the regional model, especially in the wake of the FRC deal. Has it changed your view about how or why these firms need to exist?
I would say not. At Oakmark, our view has been that the largest banks have a strong competitive advantage versus smaller banks, and that the natural tendency is for the number of banks to shrink and the big to get bigger. They just have advantages when it comes to regulatory requirements, meeting regulatory requirements, mobilization, fraud control. If you're 10 times as big as somebody else, those costs aren't 10 times as large.
Right. So when we talk about the names that you think are important from a bullish perspective, what are they? Which ones?
Well, at Oakmark, we own a lot of these names. So we own Bank of America and Wells Fargo, single-digit PEs, not much of a premium to tangible book value. In the last quarter, we added Truist after the collapse of SVB and all of the regionals coming down in price. We thought it got to a very attractive level. It's a top 10 bank. Investors are focused on their mark-to-market losses for their mortgage portfolio, both the mortgages on their own books and in securities. But what we think they're missing is that the insurance brokerage business that they have, that they still own 80% of, and has almost no book value. If they sold that at the same price that they did the first 20%, they could cover the entire loss on the mark-to-market of the securities portfolio. And then you'd be buying one of the greatest deposit franchises at tangible book value, which we think is very, very attractive.
Given the fact that we've seen so many of, especially the regional banks, sell off so strongly in recent days, you're a value guy. Is there a lot more value out there in the sector right now? How are you thinking about that?
Well, right. As things get cheaper, we always think they're more attractive. And I think the differentiation between what's going on in the stock market and what the companies are saying is happening is quite interesting. And most of the regionals came out and said they did not lose assets in the second half of March. A number of them have come out recently and said even in April they actually gained deposits. And that just seems to be quite different than what we're seeing in the stock action.
But you do point out that, if, for example, your example on Truist, if they found a buyer, right, isn't the problem this week that there were deals that regulators, for whatever reason, some things we're not even sure why, but deals didn't happen, that there is regulatory friction that's not helping overall?
Well, right, but I'm not saying that Truist would need a buyer for the bank. It's the unrelated business they have, the insurance brokerage business, that we think is highly valuable and effectively is being valued like it's a bank and should be valued much more highly.